Hey, what's up, stock compounders? Brad here. So today I want to do a little Verizon Wireless stock analysis. Okay, I put up a poll 4 days ago with some companies that really got a lot of press with the recent 13F filings from super investors. These were some of the top conviction bets from a dozen super investors that I follow most closely. And Verizon, out of this list of five, Verizon had the most interest in terms of people wanting to learn more about it as an investment. It was an investment made by Warren Buffett in the fourth quarter of 2020. Berkshire owned it previously to that, but they really doubled down in the fourth quarter of 2020. So just wanted to go into that in this video. Now, to preface this whole thing, I am a Verizon customer, okay? I'm on a family plan. It's my wife and I, my parents, my brother and his wife, so six of us, and we pay $250 each month. And we've been doing that for I think more than 10 years now. So, this recurring revenue stream that Verizon has, it's very sticky and it's quite substantial. Like the only two things I regularly pay more for each month are like rent and health insurance. Okay, so it's a pretty sizable chunk. What Verizon is collecting from my family. So let's go into it. I decided to do a 10 cap pricing valuation method for Verizon. And I thought, it made sense because Buffett bought it, right? Berkshire Hathaway bought Verizon. And this is really the simplest way that Buffett has shared in the past of how to put a price on a business. Okay, it was in his 2013 letter to shareholders. Another factor here is that the anticipated future growth of Verizon by analysts, by Value Line, by a bunch of different sources that I've looked at, it's not very impressive, right? The future growth is not very impressive. So, it makes sense to do an owner earnings type valuation for Verizon because of that. So we're going to try to find the 10 cap price for Verizon. And this is something I picked up from Phil Town, right? His daughter, Danielle Town, wrote a book recently called Invested. And it's a really great book. I highly recommend it. And one of the kind of pricing slash valuation methods that are detailed in that book is this 10 cap method. So the way to calculate the 10 cap price for Verizon, we really need to calculate the owner earnings, okay? And we're just going to take those owner earnings multiplied by 10, and that's going to give us, what we can pay for the entire business. And it basically means what I'm earning each year from the business. I buy the whole business, okay? The whole business of Verizon. It's going to take me 10 years to pay myself back for buying the whole business. Okay, that's effectively what 10 cap is. So owner earnings, what are they? The amount of cash that can go into the owner's pocket every year without affecting business operations. Okay, so there's a few components to this, but it's pretty simple. Owner earnings, you got operating cash flow. Okay, from the cash flow statement, you've got to subtract your maintenance capital expenditures. Okay, this is what you have to put back into the business just to keep it at the same level. Okay, maintaining the business, not growing it, just kind of keeping it going as is. And then lastly, you're going to add the income tax because this cap rate method. This is something that's really common in real estate. You don't consider the income tax that allows you to easily kind of compare different deals. So we're going to add back in this income tax provision. So that's it. So let's do it. So operating cash flow. I got this from the 2019 annual report, right? The 10K. So you just go to SEC. You can search Verizon. I'm not going to do that here because it's pretty straightforward. Pull up the 10K and go to the cash flow statements, and you can find this operating cash flow for 2019. It's too bad because I think tomorrow the 2020 annual report is going to come out. So I'm a day early, but I don't think there's going to be any dramatic changes. But if there are, I'll make a quick follow-up to this video. So you got 35.75 billion in operating cash flow. Okay. Now with capital expenditures, the number that I was able to get from the 10K from the annual report was the total capital expenditures. Okay. Now this tends to be an issue with doing this 10 cap method. Companies don't often break out the maintenance capital expenditures from the growth capital expenditures. Okay. So in this case, we're just getting the total CapEx for 2019. And that's $17.94 billion. So what we're going to do, and this is kind of a rough way to go about things, but it's the best I'm able to do at this point. We're just going to take half of the total capital expenditures, okay, and that's going to give us an approximation of the maintenance capital expenditures. So half of 18 is around $9 billion in maintenance CapEx. We're going to look up the income tax provision. Just do a little search, Control F, go through that 10K and find where this income tax provision is, $2.95 billion. So we're going to add that back. So using these numbers here, the 2019 owner earnings for Verizon is $29.73 billion. So in order to determine what we could pay for the whole business and still, get this 10 cap price for it, we're just going to multiply this 2019 owner earnings by 10, right? Then we get our 10 cap price. So we can buy the whole business for $297 billion. And that would be compelling according to kind of Buffett's 10 cap approach to determining a price for a business, a good price, a compelling price for a business. Now, 297. So what do we compare that to, right? If we look up the market cap, the market capitalization for Verizon, which is just the number of shares outstanding times the current price for those shares, it's around 234 billion, okay? But unfortunately, that's not the entire story. Okay, if we're going to buy the whole business, we're not just buying out the equity holders. We also have debt holders. Okay, we have bond holders, and so we have to add the debt to the market cap, and that gives us what's called an enterprise value. That's roughly what enterprise value is. You're factoring in equity, market cap, you're factoring in debt holders, and you're factoring in cash on the balance sheet. There's also some minority interest that need to be considered. But I got this enterprise value from Morningstar. Okay, you type in the ticker, you go to valuation section, and you can see the current enterprise value. So this is what it would cost to buy all of Verizon right now, $362 billion. So, we didn't quite get to our 10 cap, okay? We're gonna have to pay a little bit more than the 10 cap price in order to buy Verizon today. But honestly, guys, it's not that far off. So instead of a 10 cap, we'd be getting an 8.2 cap, all right? Which, certainly isn't terrible. In today's market, given how low interest rates are, how solid of a business Verizon is. So, 8.2%. And of course, Verizon has a 4.5% dividend yield. All right, that's what a lot of investors are speculating is a big part of the reason Berkshire bought Verizon, because of that pretty solid dividend. So that's kind of the 10 cap method. We're not quite where we want to be, but we really aren't far off. So the place I like to go first, one of the first places, I look at Value Investors Club. There wasn't anything for Verizon. The place that I go next is corner of Berkshire and Fairfax, okay? And what I like about corner of Berkshire and Fairfax, it's really just a message board. You can search a company, and you can look at the conversations that really smart investors are having about, pretty much any company that you're interested in. So this was a particularly interesting comment in corner of Berkshire and Fairfax. So the things that jump out at me here is this investor thinks Verizon has become the new bundle creator, okay, for streaming services. Now, that's a pretty powerful position to be in. You can think of Verizon as just, somebody you pay for cell service, but they're actually a lot more than that. So my brother and his wife, right when Disney Plus was offered through Verizon, it was offered for a year for free, okay? They got on that right away, Disney Plus. Now, a year later, it's been more than a year since that came out, they're more than happy to pay $10 a month for Disney Plus, okay? So, in the same way that Apple, let's read this. You might remember Warren Buffett's comment about iPhone once, comparing it to Fifth Avenue. The question is, will Apple be able to monetize it, or is Verizon already better positioned to monetize it? Because it already has a billing relationship with those folks and already getting more per month from them than they're giving to Apple. Okay, so Verizon is, Verizon is the company that we're paying every month, right? When I get a new iPhone, I get it through Verizon. Okay, I'm looking to get Disney Plus. I'm getting it through Verizon. We can look at some of these bundles, right? So this is Verizon. These are the different plans. And you can see the bundles. You can see Hulu is part of this plan, perks, Disney Plus, ESPN Plus, Apple Music, a Discovery Plus for 12 months. So, it's not just your phone service provider, right? It's much more than that. And so I wonder if part of what Buffett is seeing in Verizon is, what similar to what he saw in Apple, right? With the App Store. It's the gatekeeper for all of these apps. I mean, I don't think it's not quite on the level of Apple. But when you're in a position, and it also talks about, being in this position for affluent customers, okay? It's just a really powerful position to be in. So, I don't know how to work that into the valuation. I really just started kind of looking at Verizon in terms of, how to value the company, what the investment thesis is over the next 10 years. But, it's certainly pretty interesting, the position that Verizon is in with, premium customers charging a bit more than some of the competing, service providers, and having this leverage, right? Being that, that company that really interfaces with the paying customers, those recurring revenue streams. It's a pretty powerful position to be in. So I just thought that was something I wanted to share. If you're interested more in Verizon, definitely get into corner of Berkshire and Fairfax and take a look at some of these comments. Yeah, it's good stuff. So I'm not going to write Verizon off. Initially, I thought, all right, Buffett's just getting in for that 4.5% dividend. I think it could be a lot more compelling than that. So anyway, guys, just wanted to share this. Let me know what you guys think of Verizon in the comments. Just trying to kind of build out how to wrap my head around the investment thesis over the next 10, 20 years. So definitely curious to hear from you guys. And with that, I will leave you guys and see you all in the next video. Take care.